Welcome to this week's MTD podcast. Myself, Colin Griffiths. I have a number of customers on MTDCNC promoting all that is engineering really, and also running the MTD network, promoting engineers so they can crack on with what they do best, making components, that is, of course. So today we are joined by the infamous, is that the right word? Paul Cox from Asset Finance Northampton, a legend in finance. I've known Paul for 10 years-ish, so when I was probably 25 maybe, stretching out quite a bit. So, but Paul, an experienced financer, you were with the Lombard for a number of years, then set up your own brokerage, very successful as Asset Finance Northampton, but on the back of that, you've got a number of different funders. Prior to that though, now a little bit different to finance, what were you doing?
Prior to finance?
Yeah.
Well, I was in the military, Colin.
Oh, what were you doing?
I was a musician in the military.
Oh, right. Indeed. So you got one of those dangerous flutes.
So I've been told.
No comment. Moving on very, very swiftly. So, Asset Finance Northampton, people, I think it's really a very important conversation to be having at the moment about finance because, I mean, if you've missed what's going on, there's a bit of a pandemic going on. We're in lockdown, lockout.
Very much so.
And do we know what's going on? I mean, a lot of engineers I've been speaking to are all busy. I would say, in fact, MTD has now got an economic indicator, which we're starting to do. And I would say 90% of engineers are all very busy. How are you finding the market?
Yeah, I think I can mirror that in terms of I work along a number of different sectors, industry sectors. Clearly, the obvious ones are retail. They're struggling. Hospitality is struggling. But the success story is engineering and manufacturing.
Paul, tell me why.
That's a tough question. I think the attitude's right. I think we need to have more faith in UK PLC and engineering. Some amazingly talented people out there. I just think they're in the right place, and they're keen to drive forward.
Yeah, 100% agree with that. And also, I think reshoring is going to be a big thing as well because can you import? Can you export? Brexit's going to sort of affect things, but do you want to import loads of stuff from China these days? Probably not. So you're reshoring. The quality of our engineers, the quality of goods, second to none really is. So I think that's part of our success in, as you said, UK PLC. But I'm successful. I want to expand my business. How am I going to do it? I've got some cash in the bank. I might as well go and buy a machine.
You could do, and it's all about purchasing a machine. You need cash for it, but would you always want to use your own cash?
I don't know. You tell me, Paul. You're the finance guy.
Well, my advice would be, certainly in the economic climate at the moment, is cash is king. It is a cliche, and sorry to use that phrase, but it's very true. We've just come through prior to this year, which is the COVID year. Prior to that, we had sort of all the Brexit shenanigans in 2019, put pressure on business. This year's been an incredible year, and unfortunately, next year with the EU, we don't know what to expect. So my view, my take on it is, if you don't have cash in your business, you can't trade.
Okay.
So at this point in time, use somebody else's.
There you go. Well, how's that? So if I'm looking at funding, I mean, the government have come out with some great schemes, your CBILS, your CBILS, things like that. CBILS is not a minefield, but different funders have different routes and different things. Just give me a quick summary of what you can expect from that scheme.
Well, for me, the government funding has been invaluable in terms of holding up businesses and securing businesses, throughout this year. But businesses have been very, very good at seeing the benefit of this. They've not just used the money and then looking them for another handout. They've actually used the money very wisely. So the BBL for the smaller businesses has been fantastic. That's the bounce back loan. That's supported businesses well, and most businesses have used that to their advantage. They've maintained their workforce, or a level of workforce, with a view to coming into 2021. CBILS for the bigger businesses and bigger lending. It's been absolutely fantastic. It's been tough. It's been tough to get CBILS through, but in principle, CBIL has worked very, very well. And again, people have used that government money wisely.
Right. When you say it's been tough to get it through, so if I came to you, Paul, and said, look, I need some funding. I want a CBILS facility. Here's my information, be it bank statements, accounts, whatever. you go to the funders, how long would that take as a rough figure?
I think we need to understand where the banks are, because the banks are lending effectively the government money, but they have to be comfortable whether they're lending to a viable business, and that business needs to be viable prior to COVID, and that money that's going to be used is going to benefit the business obviously through this year and going into next year to help them grow and expand and obviously keep a workforce.
So they've got to do their normal due diligence, if not even more, to make sure, because it is government money. We're taxpayers, we want that money back.
Yeah, what people fail to understand is banks are accountable. They're accountable for actually lending that money out to good businesses and bad businesses. So the FCA will go back to, and if they...
Financial Conduct Authority, the people
that is correct, sorry.
The regulators, that's right.
The regulators. They will go back and they will actually scrutinise how funding has been put out to the customers.
So it's not like the noughties, the 2006s, 2007s, where, I mean, far from me to say this, but banks were throwing money out. They were throwing money out the door, weren't they?
It was a completely different place there.
So they're doing a proper due diligence, but that turnaround could be a week, a month, 2 months potentially.
On the CBILS, it can be quite extended. So we can't turn it around in a couple of weeks. It's never really going to happen.
Okay.
Sorry, a couple of days. Apologies, but we could turn it around in a week or 2 weeks even, depending on the complexity of the actual deal.
Okay, but that's not down to you. That's down to the funders and things like that. So I'm an engineer. I've got a great new order, for example. I want to, I've seen a bargain of a machine. I want to buy that. I want to buy it today, tomorrow, this week. If I came to you, how soon could I get funding approved?
Like I always say, once I've got all the information that I require, get it submitted to the funders, then we're looking at probably a couple of days to get an in-principle decision.
Wow.
Okay, and then in terms of drawdown of money, well, that comes down to obviously when the asset's being delivered and other things come into play then.
But I think people just want the peace of mind. I've got that funding approved. Process in the background with the supplier and things like that. Yeah, if it takes a week, 2 weeks, that's fine. But I know I've got that money in the bank.
Yeah. That's the bit that settles people down. They've got the approval for the funding, and most funders now will actually, that sanction will be valid for 90 days.
Wow.
So you don't have to use it within the space of a week, 2 weeks, 30 days. You've got 90 days with most funders.
And do I need lots and lots and lots and lots and lots and lots and lots of information? Just emphasising that point there. You might have spotted that.
The basic information is your trading accounts and bank statements. Nowadays, in COVID town, shall we say, we're looking at a COVID declaration just to understand the impact that COVID has had on your business and your staff, and probably a little bit more information in terms of some management information, P&L and balance sheet. It's not rocket science they're looking for. They're not looking to trick people up. They're just being very careful in terms of their lending policy.
Again, a bit of due diligence. You should hopefully have that information to hand. Not a problem.
Yes, indeed. Yeah, okay. Most companies will.
They get that information to you, turn it around, write it up. Will you go and see the clients? Probably not at the moment, I should imagine.
Some clients are quite happy to, because their warehouses and their workshops are set out for distance. For social distancing.
Yeah, like we are at the moment, Hashtag, because we are doing
indeed.
Audio,
we've got probably more than 2 metres between
Absolutely.
us, but I can live with that, Colin.
Even pre-COVID, Paul, I'm more than happy with that distance away from the video. A little bit harsh.
It is a bit harsh. So we work with the customers in terms of the social distancing, the COVID policies that they have in their own workshops. Yep. We like going out to see customers. I think that relationship builds stronger when we go out to see the customers, and it helps us to actually write up our report on the customer, because we can see their environment and how they operate.
Well, I think that's a key word, isn't it? Relationship, because I know recently you did a transaction for a machine from ETG, which is a new Vulcan for Microlock, for Matt Guinness, get all these names right. How long did it take you to get approval for that?
Well, I think we got the approval in about 24 hours.
Wow.
It took a couple of days for him to bring all the information together with the accountant.
Well, okay, I was going to blame Matt Guinness for that. That's not very fair.
Yeah, it wasn't Matt's fault. He was the accountant. But once we actually got all that information, submission, 24 hours. Yeah.
That's exactly what you want, isn't it? Okay, so I've got a facility. What type of facilities are you looking at? I mean, we mentioned CBILS. We'll park that for the moment. Asset funding. I'm buying a machine. Where will I go? HP? Leasing? What?
Majority of people nowadays would look at HP.
Okay.
Leasing works very, very well if you have a project on board and you're not looking to hold on to that machine for any length of time for a project, say for a couple of years, 2 or 3 years, then leasing could be good for
and
you.
then hand it back.
And then you can hand it back effectively, yes. Yeah, HP is great if you know, yes, it's great for initial task that it's going to be used for, but going forward you can utilise it. HP is a better way.
Like these machines, they'll go on for years and years, won't they? So, I mean, you've seen the Blast from the Past series that we do on MTD Network.
And exactly that. Why, you've effectively paid for it, so why wouldn't you want to keep hold of it?
That moves me on nicely to... I've got I want a new machine. My machine shop's a bit tight for them. These new modern machines are a lot more efficient, etc. I've got an old machine I want to get rid of. What are you going to do? Can you take a deposit, or can you get rid of that for us?
Well, the old machine's a great one because obviously if you're working with a supplier, hopefully they can part X it for you because they're in the same business. I know there are people out there, second-hand dealers, that will actually take that off you as a part X. So there's other routes you can take if that
Brilliant.
supplier doesn't want to take it as part X. For us, part X is an easy route. The deposit's then taken care for in the part X.
Right.
So it does help the transaction go through a little bit better with a part X. Plus the fact they lift it up and take it off your shop floor.
Oh, okay. So it swings around about. So
there's a big cost to moving a machine, as I'm sure most of your customers know.
Absolutely. Oh no, that's interesting. But again, I'm getting from that then. First point of call. I want a machine. Finance. Don't agree the purchase. Everything like that. Oh, I need some finance. Engage you guys immediately, even if it's just building that relationship, starting that relationship. You've got it in the back pocket. If that deal doesn't go ahead, it goes ahead in the future, possibly.
Yes, for us, it is about, as you said previously, about relationships. So engage us at the earliest opportunity. We can get some indicative numbers out to you, and then we can look at a number of different solutions and a number of different funders, because the funders change, their policies can change in terms of the equipment they like and don't like. So it's always good to keep abreast of what's in favour, shall we say.
Oh, well, that ties in nicely with my next question. You've been reading my script. I've got a script. But two things. I'm always a huge fan, and sorry to mention this to everybody, but I used to be in finance myself. I do apologise. I used to be a huge fan of a funding line. So I put in place almost like an overdraft, but for your HP, for your leasing. So I knew I had a limit in place. A, can you do that? And B, is it good to have more than one? So I've got my bank. Is it good to have another funder in the background just in case?
I'm a bit like you, actually, Colin. I've come from a Lombard background, and credit lines, funding lines were absolutely... They were sort of our bread and butter, shall we say. Yeah. It's great because it's an agreed facility for 6 to 12 months, so you as a customer don't need to worry about the funding. All you need to do is say, we have a new machine and we're looking to purchase. We then get the supplier details, documentation, job done. However, 2020 came along, and it's fair to say that the funders have been less, or have been more reluctant, or how should we say, a bit more cautious, reluctant to give out funding lines for that. Now, if you're a multi-million pound business and you're looking for £1 million funding line, I would say that we're still in the market for that. But the majority of the customers that we're dealing with probably only looking for $250,000, and whilst that's a big chunk of money, they're a bit more cautious in terms of offering out those facilities. What we can do is get the finance agreed and have it in place for 3 months for you.
For the night, yeah. And then a great analogy, I think, is in terms of having more than one funder. I've got my bank account, the overdraft's up to max. I've got my credit card and this credit card, and they're not up to max, obviously. I say that.
All those meals out, Colin.
Absolutely, yes.
Or not.
Yes, absolutely. Well, not anymore, but you've got that flexibility, and you might see a deal where you can get some cash back or a balance transfer on one, which is much better than another. I mean, that's a personal analogy. You can do that with your funders, your HP, your leasing. We as a broker, we have, as any other broker, we have a panel of funders to work with, and as I said previously, that policies can change, rates can change as well. So we don't just stick with one funder. We look at the funders and we get the information who's favouring a certain product, whose actually rates are going up slightly, whose fees are going up slightly. So whilst we may put you with one funder in May, in August that funder may not be offering the best deal now. So we won't go to somebody else. And I have
I personally like the fact that having a number of different funders, not a dozen funders, but 2 or 3 different funders, having agreements with them is a healthy thing.
Okay.
You build up some kudos and credibility with the funder. They understand you as a business.
Yep.
They can see that you're actually paying your agreements down, and so next time around, you're ahead of the game in that sort of sense. So they're going to be more favourable to offer facilities to you.
Next one, another thing then is you say about different funders, they change. So some funders, they might do 5 years or 3 years, only 3 years. Some might do 5, some might even do 7. Some might do a 10% deposit. Some might want a 30% deposit on the same transaction.
When you say the same transaction,
so me as an engineer, I'm buying a machine for say 100 grand, but you go to the market and actually one company will say, well, we'll only do it over 3 years, 30% deposit, but another one will say 5 years, 10% deposit as an example. So that's what you're leading to.
Oh, very, very much so. Yeah, okay. the funders have their own sort of view on a deal, but it's usually down to the deal. We have the standard agreements that they work towards, or standard policies they work towards, but on the strength of the customer, that could change. So if you've got a really strong customer and they don't want to put 10% down, or prefer to keep hold of their cash, we may get away with putting 5 or even no deposit, but just paying the VAT.
That's like another analogy I've got for you. That's like an elastic band you've got in your hand, around your fingers there, and you're stretching it. If you stretch it one way, then the others, so you might be able to stretch a term a bit or stretch a deposit a bit. That's a bit of a 90s cliche analogy there, but hey,
but it's true and it works. And the other thing to remember is we talk about HP and fixed term contracts and lease and fixed term contracts, but sometimes it's not that way. Sometimes you've got seasonality in your business. Oh. So you may want to sort of say, well, we want to structure our repayments, and we don't want to pay monthly, we want to pay quarterly. So we want to have probably a low start in terms of some of our monthly repayments, and pay bigger at the back end when the money's coming in a little bit more. So don't think it's all linear, because it's not. We can structure it around your needs, and a lot of the funders will look at that favourably, because it means you understand your business and they like that.
Well, you understand their business, Paul. I think that's what you're alluding to, Paul. That's a great overview of the finance. I always get quite sort of passionate about having the next finance head. People, they roll eyeballs finance, and it's a bit boring, but all the different options and things like that. And I think from what we've discussed here, it's got to be first point of call. I want a new machine. I've got to speak to you guys. That's what I'm getting from this.
Most definitely engage us at the earliest opportunity, and we can talk through your needs, not just for that, but obviously going forward. Why is it going to fit in with your business? How is it going to benefit your business? What sort of income will that bring you? What sort of customers will that machine bring you? Those are the things that we want to talk about. So I have a greater understanding when I talk to the underwriters.
Brilliant. Paul Cox, Asset Finance Northampton, thank you very much. Great little conversation about a bit of funding, and let's hope 2021 lets us out and about a bit more.
Indeed, Colin. Thanks very much.
Thanks for listening to the MTD podcast. If you found value in this episode, please subscribe and leave a rating and review. Find more episodes on MTDCNC.com.